Hi traders, welcome back to the Price Action Volume Trader channel. Today another educational video talking about a pattern that I like to see when it comes to the futures market open. Well, it also happens basically in the US stock markets at 9:30 a.m. Eastern time, but specifically I apply this to Nasdaq and the SP 500, which are the two main markets that I like to trade. So as you know, every day we have the two future session, extended traded hours and regular trading hours. And at 9:30 a.m., once the stock markets open, we get this period, usually about like a half hour from 9:30 to 10, where we have a lot of activity, a lot of volume and volatility coming, price moving a lot, and that is when I want to see this pattern lining up. So basically what I'm looking for is just a false break. I either want to see price falling below some kind of important swing low or below a support level, and then come right back up, regain that level, and start holding above it. And then I will look for an entry once we have broken above the candle consolidation, the last push up that led into the fake out below. And then I would like to get positioned once we have regained this level and we are above this area that I've marked off over here. And the same thing would be on the opposite side on a bearish scenario where we have a significant high. Maybe that's a swing high, the high from the extended trading hours, or maybe it was yesterday's high or an important level of resistance. And the market opens up at 9:30. We start getting that injection of volatility. We break above, and then we very quickly break down below. And then this cluster of the last consolidation of candles pre-break above. Once we break down below that level, then I'll be looking for entries on this zone. Now, there's two types of entries you can take. You could either just go in at market buy or market sell as soon as, if you're looking at this on like a 5-minute chart or a 1 minute, for example, since we're talking about, day trading, lower time frames, I would usually use this on a lower time frame or like a low tick chart. But as soon as we have a confirmed breakthrough this zone, you can market buy here. Usually the stop, if you're very conservative, you would have it right beyond the wick or the extreme of the fake out, or you could just have it beyond the significant level that was broken through. Okay, and then as far as targets, is based on price action. You will look for a significant high here, maybe some kind of gap fill. I would obviously use also volume profile, so maybe an edge of a high volume node, etc. Okay, now the thing with going in at market right here is, this could just do like this and keep going. So if you are waiting for a pullback, you might not get an entry. But if you go in on market here and then it comes down, you could have gotten a more precise entry on a pullback, as we're going to see. So, it just depends which way, if you want to be more aggressive or not with this. Okay, so we're going to go and look over 5 examples of how this would be playing out. Okay, so this is a first example on Nasdaq on the 5-minute chart. And you can see right here, we have extended trading hours, market open at 6 p.m. over here. We've had all this price action, and then we make one push over here to make a new low. We are very close to the New York Open. This is the 9 o'clock candle. This is the 9:05. And now we'll see what happens. I'm just going to push play here on the replay. And we can see market goes up, consolidates. And then we have right here. On this, you can see right over here. Let's do one more. Okay. So right there, you can see that now we had this new low that we made at the end of extended trading hours. And then right here, this is the 9:30 a.m. 5-minute candle. You can see we break below the low from the extended hours, and immediately we break up. We already have 3 bullish candles here. So what I would pay attention to now is, you can see we have a very clear area of resistance right here. We had resistance. Then this was the last push up. And then we came back down over here. Right there. You can see we're right here. So now you could have either entered on a confirm break on this candle, on this hammer candle right here. And again, you could put, if you're very conservative, the stop right here, but this is pretty far. So you could have put it right below the swings here, or even right below the wick here. And then we'll first target, we would be looking at the high from the extended trading hours. And then if we just play it again, you can see here, well, in this case, we just had a very strong breakout. So you can see in this case, if you would have taken this little resistance area, you could have gotten a retest on this candle. But if you would have taken this larger resistance area right over here, then you could have gotten in on the close of this candle. But again, in this case, we did not get a very obvious pullback in order to get back in on it. Okay, next example, again, Nasdaq 5-minute chart. And we can see over here how we have extended hours. Market is near the highs of the session. Also, if we zoom out, you can see we had this significant resistance area, which is still being resistance. This was from yesterday's regular trading hours. Resistance again, we made here, we're making higher lows, and we have this set of lows right here, and we are about to open when I put in the next candle. So let me hit play, and we can see market pushes down, 9:30 open right here. We break below this level, and then we close above. So we still haven't broken this resistance. So for me, this is still not a signal to get in, because I don't have a strong candle close through this level yet. You can see it actually rejected another time, but we have the fake out from this significant swing low over here. And then if we push play, and let me zoom in, you can see right there. So right there, we have a confirmed breakout. Market is coming back down. So you could have either aggressively entered here, or you could be waiting for a retest here when we test out the last consolidation, the last move up that led into the fake out right over here. So these ones are barely missing it. They're almost testing it, but they haven't tested it completely. but you could have already been in this position long. And again, in this case, you could have had your stop loss just right below the fake out level here. Let me accelerate this into 1. And then if we zoom out, you could have different parameters for your targets here. And right here you can see we actually did come now and retested that whole level. And then the market in this case started pushing up. And then from there, the first target was right over here, which we actually hit on the breakout. So, that was a very short target, but we could be looking, around this swing high levels from the previous day session. And, if I just accelerate this to go faster, you can see that eventually we do go and hit those levels over there. Right there. Okay, next example, we're in the S&P 500 5-minute chart. Again, we've had an extended trading hours, which is very rangy, as you can see. It's been pretty balanced overall in the extended hours, 6 p.m. open here. Right here, we are 5 minutes away from the New York Open. We're making this swing low here, and then we have this swing high that I've marked off. And if we push play, you can see I already had this level pre-drawn, but basically here's our fake out from this level. Now we're just waiting for the confirmation, which we get right here. We have a big 5-minute candle close. We break below this low. So now this gray area, this is the level we're waiting for a retest. Obviously, if I see a candle like this, I'm not going to just market sell at this candle because we're already very close to these lows here. So the risk reward would be really bad. So I would want to come back into this broken support and use this volatility, clear invalidation beyond the fake out level. And so if we hit the replay again, we can see we actually already hit these lows. Now we did the retest. We did have a big wick up, but it was still protected behind there. And then obviously the major target now would have been this low wick from the previous day's regular trading hours sessions right there. And you can see, this kinds of candles and this volatility, you get it, right at the open of the New York session. This is when you're going to get a lot of very nice price, impulsive, big action when it comes to around the first hour of the trading. Okay, now we have another SP 500 5-minute chart here. And you can see another extended trading hours. Asia session pretty slow. Once Europe opened right around here, we start getting some more volatility. And then right here, we are 15 minutes away from the open. We have the low from the extended trading hour session right over here. And let's see what happens. We push play. Right here is the New York Open. So first thing, you can see we have this pin bar here, right under here. So this is the fake out below, and we hold back above. But you can see we still have, a pretty obvious wall of resistance right around these areas over here. So until we don't have a clear break above this, I am still, not going to be looking for longs. And obviously targets, this will be the first area. This will be the second area that we're looking for targets. Okay. So if I hit play again, you can see we actually came back below again. And so this is why it's important to not chase it without a clear confirmation that you're breaking above the last cluster before the fake out. Because you could see if you had your stop right below here or even below the wick, you would have been taken out over here. So then we have this coming, another, and right there. Now we had a confirmation close right here. We had a pullback, a deeper pullback as well. So if your stop was here, you would have still been protected. And then you can see we're making now a confirmed higher high here, higher low. And then we take out our targets pretty swiftly right after. Okay, last example here in gold futures. Again, this is the extended trading hours. We're making a new high on, it's been, new high for several days now. This was the high from yesterday session. And now we're making a new high on the extended trading hours. So we're very near an important high resistance levels. Let's put play and see how this plays out. So we're coming up on the open, next candle. And then we have it right there. So you can see over here, we've taken out the highs from the extended hours, 3 wicks in a row with no clear close through. Then market starts coming down. We can see right here, and let me just pause this and we can mark it off. There's clearly a big support area here. This cluster, last down candle before this big move up. And we have all these areas of resistance here, consolidation, push up. So now we just continue observing. So we did have a close and a lot of choppiness through this level. So until we have a clear break below this, I'm still not going to take any shorts. And then right there on this close, we have our confirmed break below. We did hit this low right over here. So we would have to be waiting around this area and validation here. And then right there we have a hit, 2 hits. And then you can see the market starts pushing down. And then right over here, this would be an obvious target, followed by these lows as well over here. Okay, and obviously, if you're already in profit, you would move your stop over here. And then if this breaks down below even more, then you would trail or stop even more. You could take partials over here, etc. Okay? That's pretty much it for the video. So again, this is a strategy that I like to use in conjunction with all my other, order flow tools. I'm obviously looking at the footprint chart, at volume profile, etc. But this is a price action strategy that I like to use a lot at the market open in futures right at 9:30 a.m. Eastern during that first half hour to 1 hour when we're getting a lot of volume and volatility. and this can give you some very nice trades by taking advantage of going against trapped traders. Okay, that's it for the video. Take care, and I'll see you in the next one.